Hey guys, what's up? This is day 2 of the trade day evaluation 250K challenge, and we're looking at the Nikkei. Got some updates from yesterday. I'm just going to hit sell quickly here. I'm actually in the market already. Now, yesterday it was actually a holiday, I believe, over in Japan. I didn't have enough time to do the proper research after doing the video of getting it all set up, and I jumped into the market and didn't do my research. So issue number 1 is making sure you have enough time to prepare yourself in the market and understand what you're looking at. Over here, it's not a part of TradeDay 250K, it's actually MT5, and we've got the levels. I put these on early this morning, basically when the market wasn't open, and they've fallen into the previous day. But these levels over here, this purple line down to this orange line here, for example, is today's pivot points. Now, what I'm hoping for, and we can see what happened at the, official cash open, is the market spiked up quite sharply, got around to the highs. I believe that could be all-time highs. It really looks like it. I'm not sure back behind, say 2017, but for recent history, it's all-time highs where we're at right now. So I've got the footprint open over here, and the market is going against me. And as you can probably remember from the original video, which is in the link below in the description if you want to go check that out, I planned out what I wanted to do, and basically I could have up to, I think it was 40 points on the Nikkei of stop. So from the entry I can go 40 points against myself with 2 contracts, and I can still come back and play tomorrow. So if I'm wrong, then I can still come back and play quite safely with 40 points of movement. At the moment, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're at about 10 points, so a quarter of the way to my stop, just on the 1 contract, not 2 contracts. So I'm probably going to look at getting in again, depending on what I'm seeing in the market. So I'm just going to get in again now, and I'm hoping we're going to turn around from this level and hopefully see quite a bit of build up in sell orders come into the market to save the day there. Now, my target for today is, I'm looking to make about 2 grand if I can. I've just got to watch the upside on this, because there's every chance the market will just take this positive buying energy and just power it up. So I've really got to take care here. But my goal today is to make about 2K, because yesterday, to kick it off, it was a little bit late in the trading session and I only made about $100. So I'm just going to let this play out for the moment. So what I'm looking at here on the pivots is the R3. That's a really out of bounds type pivot point. It's kind of the furthest pivot point that's often used in trading. And if we hit that, often we'll see some nice rejection back down. That's the theory anyway. We're kind of close to the Bollinger Band on the highs on that one, on the daily. Monthly, it's a really strong market. So it's a bit scary actually to go short. Probably not the wisest move either, but we've just got to remember to jump out if it doesn't look like it's going to turn back around whatsoever. Now over to the footprint, I've hit 10. We kind of want to see, like over here on the red, that's probably limit orders. So rather than aggressive buying, hitting that side, hitting the ask, it's probably more likely to be limit orders being touched for traders that are looking to get short with limit orders. What we're seeing over here though is perhaps aggressive selling, but there's been no limit orders to kind of signal that we're ready to go short just yet. So that's a bit of a concern, and that looks like aggressive buying as well, potentially. We want to see maybe a bit more volume come in. It's one thing that is a little bit frustrating with TradeDay 250K is that it doesn't just sit where you want to see everything. I'm really hoping this is limit orders being filled here, but because of the way it's filling, it could be aggressive buying. You really want it to go up, hit the levels, and then they'll show up on the opposite side, I guess, and then take it back down. So we want to start seeing some green come in, some really aggressive selling to take us back short. So we'll see if that comes in. It looks like something's happening in the market, so we're just kind of trying to work out what the market vibe is. So we're seeing, as I was hoping, some green coming in, but we really need a bit more really to push it further down, I believe. It seems to be coming down okay. Really want some dark green to come in and really just push it home. I'm wondering if all this red on the time and sales is people that were long and they're perhaps thinking, oh, I actually want to get out. going to go in a bit heavier at this price, and I'm looking for a reaction right here. If it starts to push me up above that, I'm just going to pretty much just get out of the trade, because anything beyond that, it just means that the market's probably just going to keep going up, and I don't know when it could turn around. I've got no reference points, and because it's all-time highs, once again, historic price points, I don't have any reference points for previous highs that it might get to. So right now, I'm going to go in a bit heavier for this trade, and I'm going to get out quite quickly if it does go against me. So I'm going to say around 2.5K is sort of my maximum, where I don't want to take any more risk than that, and then that gives me another trade for the following day, and I'll just have to play it a bit safer if that's the case. But the R3, this purple line here, is often quite a high probability setup, and if we do come up and touch that, I do hope to see a nice decline following the connection to that level, and hopefully a turnaround in price. So I'm very close to cutting this trade. It's basically just going long, going against me permanently without any retracements. We're at all-time highs. We're running into the R3 of today based on the previous day's levels. And yeah, it doesn't seem to be respecting the levels or anything like that at the moment. So probably going to jump out very soon and just call it a loss. Obviously it's quite hard to take when you've just started an evaluation and you've pretty much kicked off with quite a bad trade. It's just not really respected anything. It kind of hovered for ages and then just went in the opposite direction. But that's trading. It's really important to be able to cut things before they run rampant and blow you up. Ideally, we want to have some breathing space for tomorrow so we can come back and hopefully find a better position. And yeah, I'm just going to wait it out a little bit longer. If it does turn around, that's great, but we've only got sort of a few points before we hit that 2K max loss area. I don't really want to see it go too much higher. My target, which I hadn't mentioned really, is this previous day's high down at the 3727 kind of area. So if we kind of get to 37320, I'd be pretty happy, but it looks like we're just going pure green today and it's just going straight up. Alright, we've hit the max loss. If we don't turn around right now, basically have to just jump out and take a loss. So I've jumped out for $2,125 loss, and the market just continues to go upwards. It's gone beyond all previous highs and R3, and sometimes the market just has a lot of power behind it and can't jump in front of it like that. That's one thing about the index markets. They often work better for buy positions, but for me, buying into these levels would be quite a concern for me. So we'll see if this does turn around and come right down to the target. I'm sure it probably will at some stage, but for the risk, it just doesn't seem to be worth it to be able to stay within the rules of trade day and the challenge. That's day 2, quite a rough day, and obviously if there are any other setups, I'll come back and trade a little bit later, but at this stage I think that's me done and dusted for the day. We'll come back tomorrow. Thanks for watching. I want to quickly cover what happened through the rest of that session for the Nikkei. We got in down here and we were hoping for a turnaround at this purple level, the R3, because that was actually for this particular day. Now the market powered up, as you can see, up to over 38,000. Now I would have exited around here and called it a day. It went up a little bit higher, retraced slightly, and then just powered up. It did eventually turn back down, but it would have taken so much heat on those futures contracts at $25 a point, and it just would have been absolutely devastating for the account. Eventually it got down below the entry area, but that movement was just ridiculous. It didn't respect all-time highs because we were already there. It just powered on up, and this was the highest level that I had reference to in terms of trading this market. So unfortunately the market just happens to have massive moves sometimes when you start trading new challenges. It's just what happens. Sometimes the market does crazy things and you can't necessarily predict it, and trading's all about measuring your risk and playing within the rules of the prop firm that you're going for. I have some even worse news. I did jump on later that night and traded the US 500, the S&P 500. I got in around this level here. We saw a bit of rejection off the breakout short, and I was hoping the market would go up a lot higher than what it did and perhaps do something similar to what the Nikkei did in its session and absolutely just power up. What happened was there was some news coming out, and unfortunately before the news, I was stopped out before the news happened. So that's a huge drop, a massive increase on the Nikkei and a massive decrease on the S&P 500. Sometimes you just can't pick it. So I was going long on this one and short on the Nikkei. There's probably traders out there that knew what was going on and that kind of thing. These aren't particularly my markets. I like the FTSE and the DAX, and I like to know the pivot points, the cam levels, if you follow my other videos, and sticking within those rules and staying away from news. The trade day doesn't allow you to trade the news anyway, so I would have got stopped out if I had have held this position any longer, but that cancelled out my account. Now I'm going to have to do a reset. The good thing about trade day is you can buy a reset. I'm on the 250K account. A reset is $100 USD, so it's easy enough to buy a new one and start from scratch with access to that bigger chance of funding. So rather than going for a smaller one like a 10K, which I think is $100 anyway or thereabouts, I went for the bigger one, and I can just simply reset and start again. Hopefully with a bit better luck on the trading side. And I want to also cover the importance of some of the rules and lessons that I've learnt through this quick experience. Lesson number 1, doing your research before the market is ready and sticking to a plan. So when I jumped in on day 1, I didn't have time to go through and set up for the session, look at all my levels and plan out what I was going to do for that trading session. It's a really important thing to do, is check what's actually going on. Is the market on a holiday? What are the levels that you want to look at? What direction do you want to favor? And then for day 2, the lesson was overtrading, not particularly sticking to a preferred market. And that's one thing that I'm not a huge fan about with trade day, is that they don't have the FTSE and DAX, the UK 100 and the German 40. Those are my preferred markets, but unfortunately those aren't available in the standard pack with trade day. And I don't think you can even upgrade to access those. Lesson number 3 is to really stick to your trade plan, learn what you're going to do, and see if you can actually stick to the rules that a prop firm would offer you in a small account of your own. So rather than paying all these fees for prop firms, hoping you're going to pass, asking people, oh, will I pass, will I not? Get the rules laid out and trade as though you've already got funding in a regular account. Get the experience up, trade on very small amounts so that it's actually going to cost you less than going for a prop firm if you're trading very small amounts, the smallest you can go, and sticking you within those risk limits and aiming for those potential targets. So learning the ropes without paying for funded accounts is a much smarter way to go. I see people ask all the time, hey, will I pass based on XYZ? Well, if you're asking that question, you're not ready. You know the rules, you know the targets, and you should know your own drawdowns and profits as well on another account. And you can simply transfer that process over to a prop firm once you're ready. Once you've got a series of months where you've been able to pass that criteria, then you can go for it. But until that point, there's no point wasting your money on a prop firm that you're not ready to trade. So I'm going to do a reset and I'm going to take you through that process and basically start again.